Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to take a look at the New Zealand versus the US dollar, as the head and shoulders pattern could be forming here on a weekly time frame. So typically we won't look at this until the sort of start of next week. However, we've seen a bit of resurgence in the US dollar today, even through sort of the European and the US session. We've started to see that dollar strength re-enter the markets, and it made me have a little look at New Zealand dollar and the sort of key levels surrounding this market. And if we just take a look at this weekly time frame, we can clearly see that price is potentially forming a head and shoulders pattern. We talked about this market recently and the fact that there's key support sitting all the way down at 7013. So it looks to me that if we do close like this at the end of the week, we could be seeing some further downside on this market to that key level that we've spoken about. The neckline of the head and shoulders pattern is a little bit higher up though. It's around about 0.71. We can see here that the market has recently found support in and around these areas previously. So we'd need to see price break below this level to confirm the head and shoulders pattern has completed, then look for the further shorting opportunities on some trend trading opportunities. So if I just go into the daily time frame, we can see that price is bouncing from this key area in here. And the reason why this is such a key level is because this is a large institutional level. When we look at the institutional volumes within this impulse move in here, there is a large volume level sitting around about 7252, and what it looks like is that the institutions have defended this level for the past couple of days. So the market moves to the downside. This consolidation pattern in here is where institutions build up large positions. Okay, the market's broke lower, showing us that the sellers have won in this consolidation, meaning that institutions are selling this market, and then price has pulled all the way back up, and this basically gives them a secondary opportunity to add into their positions. Okay, and you can see that this is clearly rejected this area. We've seen quite a lot of downside from this point, quite a strong significant bearish move as well, which suggests to me that we could see that continuation. Now, one thing that we can look for in order to sort of continue looking for shorting opportunities on this is the change of trend. So first of all, we have this trend line support running through on this channel. So if price can break through this area and break through this low, that could be an opportunity to start shorting the market. Alternatively, we can go down into that 4-hour time frame as well. And like we said recently, if price can break through some lows or give us an early sign that price is going to break lower, then we can start continuing to look for short-term opportunities on trend trade. So if I actually bring in the fib tool, and because we're in this sort of uptrend on the 4-hour, I'm going to go from this swing high down to this swing low. And you can see where price is currently reacting is this 236 Fibonacci level. Now, if you watched the Euro Oz video yesterday, we spoke about this level in here being quite crucial in trend trading opportunities. Now, if the price was to close below this 236 Fibonacci level, then it would actually suggest to us that the market has retraced deep enough that we're starting to see sellers take control of the market. So what I would expect if price was to drop below the 233.6 Fibonacci and close below is an actual continuation of the downtrend on the daily time frame at that point. If price doesn't close below this area and we see a rejection, then we need to wait for a little bit more confirmation at that point. Okay, so keep an eye on this 23.6 level. It kind of lines up with the 0.7180, which has been key support and resistance lately. Okay, so we need to see and wait to the reaction here. Like I said, wait for the breakout. If price does break out this trend line and breaks through this low in particular, around about 7152 or 0.7152, then we can start looking to trade this downside pressure. Okay, so keep an eye on that. Could be seeing a key head and shoulders pattern forming on New Zealand US dollar this week. We'll keep you updated as usual, and I'll speak to you soon.